Oh boy, here we go again. Talk about some fresh blood in these markets, from last night's video. Welcome back, guys. It's Thursday evening. Time to get back to work tonight. We got one more day left this week. Better make it count, right? Thursday evening, August 26, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is so great to have you with me. My job tonight is to help us find the best trade setups, the best opportunities to capitalize on tomorrow. That's Friday's trading session, the final Friday of the month of August. We're not done this summer. That's next weekend, but pretty close to it here right now. Fridays, of course, are always one of my favorite days to trade. We always seem to find some great trades in our trade room, so I'm very excited for tomorrow. I got some great trading opportunities on my radar for tomorrow. Really, everything looks pretty bearish right now. S&P is bearish. Nasdaq is bearish. And I know the gold, we definitely got that reversal on the gold we were talking about in last night's newsletter, but there's a new range down there. It doesn't look that easy for the buyers. The buyers have the momentum right now, but I would love to short that gold and take it right back down to those lows. Not to worry, I'm going to go over all the details tonight. By the end of this video, you'll know my favorite trades for tomorrow. You'll also know some stuff to avoid to keep yourself in the green, out of trouble, whether you're trading on your own, you're trading with me tomorrow in our trade room. Before we jump into the video tonight, though, as always, I want to thank you so much for tuning in. If you're here for the first time, make sure you subscribe to our YouTube channel. I publish this video every day during the week with my best trade ideas every evening. I don't want you to miss next week's newsletters. There's no video on Friday night. We'll come back next week, so make sure you subscribe. Hit that little bell icon so you get notified every time I upload something new. And if you have any questions, don't be afraid to drop those questions in the comment section. I always love to answer all your questions, so don't be bashful in the comments. And if you guys enjoy this video, if you tune in every evening, if you carve out some time to get your mind right and your charts right, if you enjoy the video as much as I enjoy making it, hit that like button for me here tonight. Really appreciate you guys tuning in and joining me every evening here tonight. But enough of the intro, though, Joe. Let's get this thing going. Friday is right around the corner. Like I said before, we usually seem to find some really good trades on a Friday. Now, of course, tomorrow is a summer Friday, so it's going to be a little bit smaller window of opportunity. But as I mentioned, last night on the newsletter, we wanted some fresh blood in these markets, and we definitely got them. We definitely got them. Markets are bearish right now. We're bearish into a trading range on the Emini. We are bearish into a trading range on the Nasdaq. We are, in reality, we're bearish into a range on the gold, but it's tough to look at that big move and say we're bear right now. We're definitely a little more bullish than bearish right now. But like I said, I would love to short this thing back down on the gold. We got a big range up there, so I wouldn't count the buyers out. The buyers have it on a silver platter right now. I get some breakout opportunities back up. I'm watching as we go higher on the gold, so plenty of setups on the gold for tomorrow. Would love to short some bounces on the Nasdaq. The Nasdaq is a little bit of a curveball, though. There's a couple things I want you guys to be aware of in the Nasdaq, because the Nasdaq and the S&P look similar, but they're quite different. We'll talk about it. I'm obviously looking to be a seller on the Nasdaq right now. I would love to sell some breakdowns on the Nasdaq tomorrow as well. And I mean, let's face it, would I be surprised if these reversed and went higher tomorrow? Of course I would not. Neither should you. These markets have proven time and time again they're more than willing to buy the dip on these big moves down. So I will certainly make sure we're ready for the long side for the reversals tomorrow. The S&P, I'll tell you, the S&P is interesting. S&P has count them out, 1, 2, 3 ranges. We don't see the trifecta very often. We got 3 ranges on this chart. This definitely makes it a little bit interesting. It's a pretty straightforward plan, though, on the S&P. I would love to sell into that bounce tomorrow, and we get a bunch of great open space below us. I could only hope that we get a nice another leg lower tomorrow, because it's some great targets back down to where the week began, well below us. All right, I'm going to go into all the details tonight as we dig deeper into these videos. I'm stoked, as the kids say here in SoCal. Let's jump into the news, though, here. Let's make sure we're on the same page here for tomorrow. Friday, August the 27th. Like I said, tomorrow is a Friday. It's going to be a smaller window of opportunity, right? So we usually trade from 8 o'clock to about 11:30, 11:45 in our trade room Monday through Thursday. Usually that'll be around 11:10, 11:15 on a Friday. It might even be earlier than that. What I always do is I always check the kind of check the pulse of the market at about 10:45, 10:50. So just keep it in mind. Remember, I'll tell you guys the same thing I tell my clients every morning. Trading is like riding a bicycle. It's so much easier when it's moving. So tomorrow, 10:45, 10:50, 11 o'clock Eastern time in the morning, if we're not moving very much, just take that as a sign to grab the sunblock, grab the beach chair, and enjoy the what's left of the summertime season. So we're going to try to make our money bright and early tomorrow, and we've got some big news that will hopefully help us accomplish that. We got the PCE, the personal income and outlays. This has been touted as one of the biggest news reports of the week this week. Now, it may, of course, be overshadowed by the mess going on, the poor stuff going on right now in Afghanistan, the Delta variant. We get Jerome Powell later on in the morning at 10 o'clock Eastern time. So between Fed speak at 10 o'clock, the mess in Afghanistan, and of course, the Delta variant kind of still ripping its way through the world. That may overshadow that, but I can only hope we get a nice big shot in the arm of volatility tomorrow at 8:30 Eastern time. The international trade number is nothing compared to that personal income number, because just today we heard from 3 Fed speakers today kind of candidly saying they were hoping that the tapering process, right, the withdrawal of stimulus will be sooner rather than later, and that's all because of things like personal income and outlays, right? These inflation numbers that have been stubbornly high here. So that might surprise us tomorrow for a little shot in the arm to get us going. I certainly hope so. The one thing I kind of worry about tomorrow is we may have to cram everything in to that 10 o'clock hour. Jerome Powell takes the microphone. It's a virtual summit, so it'll probably be, some microphone in his home office somewhere. But the world is listening in to him tomorrow. You could tell this week people were, you could tell the big money was not, obviously that big shot went lower today, but you could feel the big players in the markets this week were definitely playing it lightly this week. Most likely, we assume, waiting to see what he's going to say about the outlook on tapering, on stimulus, on raising rates. I won't go into more detail on that, but that my only concern tomorrow is it might be a bit slow until we hear those first couple sentences out of his mouth, and then we may get that 10 o'clock to 10:45 block tomorrow might really be where we get the best price action. Like we always say, right? It doesn't matter what happens. We're going to trade no matter what happens. We're going to capitalize on whatever the market gives us here, whether it's up, down, sideways, if it's slow, if it's fast. We'll put the plan together tonight, so we're ready to capitalize on everything. Hopefully the 8:30 news gets us going. If we have to wait till 10 o'clock to 11 o'clock hours, so be it. That's what traders do, right? We take what we get, and we make lemonade with the lemons that we get. Now, speaking of lemonade, sounds pretty good, actually. We'll be making that lemonade tomorrow morning, and of course, every morning, trading together in our trade room. I'll put all the membership information you guys need. I would love to have you there, right there with me in the trenches, hunting for these trades and succeeding right along with us. Every morning we prep together, we trade together, we review together, and we usually succeed together in our trade room. I'll put all the information you guys need in the description of the YouTube video. We open tomorrow morning, 8 o'clock Eastern time, so be there or be square. Let's get back to our charts here for tomorrow. What we got? S&P's ready, Nasdaq's ready, gold's ready. Really glad to see you are ready right along with us here today. Let's start off on the S&P 500, shall we? Now, of course, don't forget, I'm going to put chapters at the bottom of this video. So if you're watching this tomorrow, or you're like a lot of folks I know will watch this all the way through, and then they'll go back and kind of use the chapters at the bottom to pick and choose where they want to go the following day. Now, what do we know about the S&P right now? What's the most important factor? Well, the first thing is we're obviously bearish. You probably don't need me to tell you that we are bearish. We had that very strong move down at 10 o'clock this morning. Like any strong move, you expect to see a retest of that low. They did retest that low barely, and I point that out because the Nasdaq has not retested its low, and that's one of the key components of the reason why the Nasdaq is not significantly, but enough different to make it important you really pay attention tomorrow. So we're going to see that difference here in a second. So bears definitely have control. That's the kind of the second component that you'll notice here are the three trading ranges. We began the day in a trading range. We blast out, right? We pretty much turn into a trading range there. And really, for the most part, the day ends in a range, right? And the way recency works, it's usually the last range is usually the one that actually acts like the magnet. Right? The term recency, whatever happens most recently is what's given more weight or more, emphasis. That's exactly like this, right? So we have that new trading range. That is going to be the magnet. And so we're bearish. That range down there will act as a magnet. Now, what happens a lot is you'll see situations like this a lot where you'll see a bear market run into a range. It'll blast lower for whatever reason. Some news comes out, right? Something happens into a new range. And at some point, the market will pop right back up and use that previous range. Because remember, ranges are magnets, right? They'll go up, use that range, and sell it back down again. And the amount we go up can be used on the amount we go down back as a target in the opposite direction. So that's kind of what we're thinking right now. We're thinking, okay, do we get that move up into the previous range, back down? Do we really get lucky and go all the way back up to the underbelly of that range? We could only be so lucky, right? Because that would just be an incredible risk-reward ratio. That is a big part of this strategy for tomorrow. What else do we have going on right now? You can also see the channel on this chart. I've marked up these lows, kind of a weird looking way to draw that channel, but boy, does it fit well. That channel really comes into play up off the highs. You could probably say this is a spike into a channel. And what do we know about spiking channels? They love to sell off around the base of that channel. That's an important part of this. And you'll also notice I've got some levels of resistance drawn up with those higher highs as well. If we go lower right now, I mentioned earlier, there is a ton of open space. Remember that amazing day we had on Monday? Remember that just free-for-all running higher on Monday? Yeah, well, if this thing keeps going lower, they're going to give that whole thing back. And that weekend gap at 37.5 makes for an easy target for those sellers if this bloodbath starts to take on another leg tomorrow. So we definitely have some excitement to the downside. Like I said earlier, I would love it if this thing started to rip lower and just ride that full collapse off that big move from yesterday. We'll see, or from Monday. We'll see what happens though. I think the most important thing right now is how do we pull back? How do we pull back? Three basic types of pullbacks. Do you remember this from earlier this week? Earlier this week we talked about shallow pullback trap, right? A deep pullback failure, really deep pullback, does that ring a bell from earlier on in the week? Okay, that's exactly the plan for tomorrow. So again, we know we have the underbelly of that range. Okay, that will be the first one. Shallow pullback. Okay, shallow pullback. We go up. Okay, we go up. The buyers come back. They try to get long off of this off the moving average. Let them try once. Let them try twice. Get that trap. Now, why do I want to trap? I want to trap because I want to avoid trading too close to that trading range. I also have to respect the potential this range above us may still have some lingering magnetic effect. You know what I'm talking about? So I want to respect that. I want to let the buyers try a couple times. But more importantly, though, I want that trap. All right, I want that trap. That trap will be the money maker if we get a shallow pullback. Next one will be, let's say we go back up and we take out the top of that channel. Now we take the top of the channel now out. Now we've got a lot more space. There's not a lot of momentum for the bulls yet. So I can now look for the buyers to come in, try to buy that pullback, and then we can sell into stop losses and we can grab that pullback combination. Okay, we call these failure patterns into pullback pattern combinations. We see a lot of these in our trade room. You can see one right here. There's one right there. right? We go up. The buyers try to buy the pullback. Those poor buyers, don't you know that whenever you see a strong move in one direction, you're going to probably go back and retest that low? They apparently don't watch this nightly newsletter. Buyers try, they fail into a pullback combination. That same, failure into pullback combo is exactly what I want to see for tomorrow, coming off of this area, up overhead here. That'd be a great trade for us. And again, if we really get what I hope we get, we'll go all the way up into that expanding triangle, get up into the underbelly of that big range. At that point now, what's the problem? Yeah, this is a pretty deep pullback at this point now. So what do? You got to respect the buyers at this point. This is kind of similar to what's seen on gold right now too, by the way, right? Gold is very similar to this, where it's overall bearish, but a big push higher here. If we do get that big push higher, which would be great for getting a good risk to reward ratio, but remember, whenever you get a really good risk reward ratio, there's a trade-off. It doesn't come free. If you want a good risk-reward ratio, what's the trade-off? Momentum. Momentum is always a trade-off. To get a big risk-reward ratio, you've got to give something on the side, and usually it is momentum. And that means in this case now, I can't just get too aggressive because the buyers may come in and hit it, after a second try. What I'll do is I'll let those buyers try once. I'll let them try twice, and I'll look for a couple different options. It's a bunch of different variations of this particular, we call these a two-try failure. One of my favorite techniques is to draw a trend line off the low, draw a trend line off that big high, and then sell off that trend line. Okay, again, it's kind of a variation of a two-try failure pattern. It's just simply waiting for the buyers to try twice, right? Once and twice. Now, once we get that short going down into that trading range, oftentimes you're not going to get, we talked about that failure into pullback combination earlier, right? And that in the shallower pullback. Oftentimes you're not going to get that here. The market will really drop. And when it really drops, that's where you'll wait for that follow-up trade for that trap. Okay, the trap will be your best bet because you don't want to sell too low. Again, it's going to be a two-try failure off the high, and of course, a trap setup as we go lower. Now, these failures into traps, failures into pullback combinations, I'm just simply kind of drawing on the charts right now. If you want a deeper dive into all my favorite price action setups, I have hundreds of real examples of these setups on our favorite markets, all wrapped together in our quick start class. I'll put a little link up there for you in the upper right hand corner. If you're new to this channel, or maybe you haven't grabbed that course yet, our quick start class is a 7-day class to bring you right up to speed with how we trade in our trade room, how we find the right levels of support and resistance, how we time the entries with our price action setups. Again, I've got a lot of great examples of those setups in that quick start class. If you've taken it, you know what I'm talking about. If you haven't grabbed it yet, though, definitely make sure you grab that in the upper right-hand corner. So now, how do we buy this market as it goes higher? Right? What's the technique as we buy it? Here's what you want to look for. As we go back up, probably going to be inside of this channel area, the top of this channel area. As we go back higher here, I'm looking for a pullback that holds. If the buyers can hold that pullback and jump off of that moving average now, right? If the buyers can hold it. Now, that's not enough. Okay, that's not enough, right? We go up, the buyers try. That's not enough right there. And as I always remind you guys, it doesn't matter how strong the first leg is. All that matters is how strong that second leg is. Can they really jump off the moving average? If they can, now the buyers have earned our respect back, and now we can mark up that high, we can mark up that low, and we can now look for, as I always say, the first test is the best test. I want to get in off the low of that channel. Now, I say get in because it's not going to be a pullback setup. The two setups we look for at the lows of this are usually traps and failures. Failures then usually turn into those pullback combinations. and that leads into those strength moves to finish off the measured move after that leg. Again, I'm going to go over all these price action setups. I'll also cover all the time frames to use because I'm not going to trade that off a 6,000 tick chart, right? That would be ridiculous. So we're going to drill down to a faster time frame, find the entry there. Where do we think the profit target will be as the market rolls higher here? Well, we've got the pendulum swing up there at 44.92. That'll be a nice, easy target there. But the buyers obviously want to get back up to retest those big highs, right? Which I guess is the all-time high right now, just shy of that 4,500. So that's how we're going to trade it if the market goes higher. Now, if the market goes sideways, we're going to keep on sitting on hands, and we're just going to execute the same plan that we talked about already. If the market goes lower, how do we trade this thing as it goes lower? Well, a couple things we can do. First of all, we had a pretty strong move down. So they might take out that low, and then we may see the bears try once, the bears try twice, and we may get one of those classic 2-try reversals. 1 try, 2 try. Now, for that reversal, because we're so bearish, I would really like to get a trap off of that low, a trap entry off the low. Again, remember, we're very bearish right now. We are at a major area of support. We do have a couple of ranges above us, so I wouldn't be totally opposed to being a buyer on this, but I have to respect the good old momentum. And of course, give the bears 2 tries. Once those bears try twice around the moving average, now we know their stops. Their stops are sitting right above that high, and I can buy. Again, I'd love to get a trap. Nice strong signal to be a buyer on this. And then remember, at that point now, if we can get a strong enough move going higher here, I can now mark up a new trend line off that high, a new channel off of that low, and then we usually will pull back right around those same spot, there, and grab that pullback entry. Again, it's not really a pullback entry. It'll be a trap or a failure on a faster time frame to buy off of that low here. That would be a great way to buy this as the market goes lower here. Or can we trade a breakout? We definitely can. There are 3 types of breakouts that you want to keep on your radar. One of them is called a 1, 2, 3 breakout. Now remember, this one does not require a very strong first leg, but a very strong second leg. 1, 2, 3 breakout. We're going to mark that low. We're going to mark that high. We're going to drill down to a faster time frame. I'm going to find my bull trap entry. I'm going to find my buyer failure entry. A lot of times, of course, it'll pull back just above the moving average for that beautiful failure into pullback combination. Again, I've got hundreds of examples of those setups from our favorite markets, all recorded in that quick start class, that free trading class in the upper right hand corner. So you definitely want to grab that as well. A second entry for the breakout would be a 2-try breakout. This one does require a strong first leg. This one will then, of course, will have a shallow pullback, a lower low in price, and a trap high. That is definitely going to be one of my favorites, really. So if the market really blasts lower, you know what I mean? If it really blasts and kind of gives you a couple of really strong pushes down there, that shallow pullback drives the sellers crazy because everyone's waiting for a nice deep pullback on that. And then you see that lower low in price, strong move down, shallow pullback, lower low in price, traps, baby. Traps, baby. That's where the money is, right? That's a great trade here. One of my favorite trades. We've seen a lot of those this summer. And then one last thing is a kind of a breakout into a runaway or a spike in channel. Let's say, for example, we see a big breakdown, and the market starts to kind of grind lower. This does happen a lot in summertime markets. It may grind lower basically because of all those buyers that took the price higher on Monday. As all those buyers get out of their positions, it's not that sellers are selling down there, it's buyers are getting out, and that's what usually results in kind of these grindy markets where it doesn't really pull back, right? Those are not for the most part bears getting short down there. Those are buyers getting out. So in that situation, what you do is find that channel and then wait for a pullback, wait for a trap, wait for that pullback. Get that trap entry, get that buyer failure, get that pullback short. Again, there's traps, failures, pullbacks. Again, if you've taken that quick start class, that free course I keep mentioning, you know exactly what I'm talking about. The key though is to wait for the bounce. wait for the bounce and then sell it back down from there. So lots of potential here as we go higher, as we go lower. The only thing we need right now is a few more hours of time. See how the thing opens up here in Asia. And again, hopefully tomorrow we'll get some good volume early, because we may have to, may have to wait through the old Powell speech tomorrow at 10 o'clock Eastern time. Let's keep going. Let's keep going here right now. How about some Nasdaq? Now, Nasdaq is very similar, right, in the sense that we have that strong move down. We can definitely see there's going to be a range on this chart. There's two ranges on this chart. We had that bear move lower into a range like everybody else, right? Got knocked down with that strong breakaway move. They get that big pop up, and you'll notice, right, they haven't retested that low yet. There definitely is a range right here, and that's the big difference between the S&P and the Nasdaq is, we have that range right here. That's great, but now as we pull back right now, what's the problem going to be? The problem is going to be this rising support trend line. It's going to require us to be a little careful here. At the same time, we also have that pendulum swing down here, which the S&P doesn't have. The S&P has potential for a pendulum swing going higher, but the one going lower here is not there. So we're not quite there yet. It isn't the same situation on the Nasdaq. The Nasdaq definitely has some space to make a run if it can break the pendulum swing. But, again, there's a lot more in the way right now on the Nasdaq. So let's clean this up a little bit. We're overall bearish right now. The fact that the buyers couldn't hold up here, when they got that big pop, the buyers once, the buyers twice, and, collapse back down again. Beautiful example there of a two-try failure. Let's see here. You know that the fact the buyers couldn't hold that up there, it just confirms the bears really have this. I do understand there's a big move up. I get that, but the fact that it came right back down again, remember, we oftentimes will see two ranges. The market will break down, go up, take out that previous range, and come right back down again. So we're definitely bearish. The variable is the rising support trend line, and that's the big question mark, right? So, we talked about this earlier, three types of pullbacks right now. Really on the NASDAQ, it's going to be all about traps. It really will be. As we pull back, it's going to be all about traps. The only thing that would make me change kind of my tune on this would be if we could take out that low. So let's talk about that. And a lot of this could also apply on the S&P as well, by the way. So let's say we get a shallow pullback. Shallow pullback, we may see this market, kind of run up into this area right there, right? That area right there is a pretty, it's a pretty obvious level. You can see it holding across there, holding here. So that area is very, very attractive. Only problem is with the rising support. So to try trap or, looking for a trap entry to sell back down again, that trap will definitely be on my radar. Hopefully we go even higher. Hopefully we get up around that trend line. There's a couple different options, by the way, for drawing that trend line. It could be a little bit higher. You can see there, it's pretty obvious that big trend line coming down here. So that trend line, what I always tell my clients is, think about that trend line as like a big, thick area. You know what I mean? I make them small because I want to see them exactly where they are, but just be aware, trend lines are really kind of ranges around that area. So that whole area up there is kind of going to be that trend line. Same, kind of same thing though. If we do get that move up here into that trend line overhead, we still have that problem with that trend line. So we really do want to get that trap entry for that short. The only scenario that I would say you could probably get away with that short without a trap on this is if we got one of these, kind of the opposite of this one right here. So sometimes what happens is the market will go up into resistance, and then as the market pulls back, it'll do something like this, where it'll try once, and then it'll kind of grind, you know what I mean? And then it will try again, and then you get this channel. Like I said earlier, you can mark up that low, mark up that high, like that will work. You know what I mean? That will work because now I've still got my two tries. Again, you're still kind of respecting the bulls. You're respecting that range, really, is all you're doing here. But you're trying, of course, to get this thing, you're trying to get short on this without just selling right into that rising support. You know what I mean? So if the market goes up and then goes 1, 2, then yeah, I need that trap. I do. I want that trap entry. But if the market jumps up and kind of goes 1 and then kind of grinds a little bit, you know what I mean? Find that, you know what I mean? Like that's something I can do. I can take that one. That's fine. It still gets me the 2 tries that I want. It still gets me resistance, which I love. And it still gets me that nice, risk to reward ratio. So I'm not too worried about that rising support trend line. That's definitely something to kind of keep in mind tomorrow. And as you can see, there's a little bit of nuance to that. There's a little bit of gray area to that. And so I'll make sure we're on top of that tomorrow once we get there. The buyers, I'll tell you, the buyers definitely do have anytime we see a rising support trend line, it always gives the buyers a great chance. Just because we know the options are limited for the sellers. So buyers have a great shot on this, but again, because they failed all the way up top there, you got to respect the bears on this, and most importantly, you got to respect this range, which again, recency is most important. So at this point, we got to get this price going higher. The buyers have to either show us a hold and go, so I can then find that new channel, drill down to a faster time frame, and buy that first test, because the first test is always the best test. Where would that target be, by the way? Remember, it's got to be a real strong jump off that moving average, right? Real strong jump off that moving average going higher. The target at that point, I mean, you've got those big highs up there. So you have to think that's the big target for the buyers, right? Back up in that, 15,380 area up overhead. That will be one way to get long on it. Another way to get long would be, let's say, for example, we get that jump up. And then just as we talked about on the bear side earlier on the S&P, let's say, for example, it starts to kind of grind. You know what I mean? This is because all the sellers who are in, they're getting out. It's kind of grinding higher. That's also going to be a bull market at that point. Well, what do we do, right? We find that channel. It's a spiking channel. And we start looking for traps underneath prior swings. Usually this will be a trap into a failure, into a pullback combination. And again, you'll learn more about those price action setups inside that free quick start class as we go. And again, we're going to drill down to a faster time frame. We're not going to use this 4,000 tick chart to trade that tomorrow in the trade room. So that's an option for us as well. If the market was to straight rip running higher, very strong run higher, shallow pullback, higher high in price, traps, baby, right? That's the one I want. Right? So strong move up, shallow pullback, higher high in price, traps. If I get lucky, we'll grab that new channel, find that new. That's just, it doesn't get much better than that. That's a must take trade. That's a sell everything you own, put as much as you can into that trade and take that trade. Properly position size, of course, right? But all kidding aside, that is definitely a must take trade if we can get that strong pop, shallow pullback, higher high in price, and if we can get off the low of that channel, even better. So we got a couple options here for the buyers going higher. I definitely would say too. I would definitely say too, if we go lower here, take out that low. And then get these bears trying a couple times, get the bears trying once, higher high, try twice. I would be more than open to that trade too. Again, draw that trend line off of that low, get that trap below that low. Remember, you always want to buy off support. Okay, that's kind of the general rule. You always want to buy off support, and you always want to sell that resistance if possible, especially when you're trying to get a reversal like this. So I'm buying off the trend line. Maybe I'm buying the trap. Those are great entries after those bears have committed a couple times. They take out the low. Again, take out the low. Now dig that grave. 1 try, 2 try for the bears, and we see a nice strong signal coming off. That's a great trade. And then again, what happens a lot of times is this thing will rip higher, right? Really rip higher. All of that momentum now, mark up now that new channel. And remember, I don't care where I am. If I have enough momentum, that pullback is at the very least going to retest that high. It may not keep going forever, right? It may not keep going forever, but if I have enough momentum coming off of that low, again, we talk about must-take trades, that's a must-take trade. I always make sure I get my target off before that top is hit, because that's all you really know. You know what I mean? That's all you really know. You don't really know how much far it's going to go, and leave that runner, up around that next level of resistance. So you're buying that failure, and you're trading the turn. You're trading that rotation, right, for tomorrow. All right? Great example there, how to be a buyer off of that low. As we go lower, I definitely would be concerned about this pendulum swing. You know, the pendulum swing is there. It will probably act as support. So, you know, if we make this run lower, be thinking about traps. If we can get this market running lower, be thinking about that strong move down, that shallow pullback, that lower low in price, and that trap. That trap is going to be where the money is because everyone knows where that pendulum swing is. Okay, or we get that strong run down. The bears say heck with that pendulum swing, and they blast anyways. That could easily happen, right? Like I said earlier, get that previous all-time high down there. We may see that move lower. The bears may come in off the moving average and say, hell with the pendulum swing. We're gone. We're going through it. If it just runs right through that pendulum swing like a paper napkin, right? Now you know, mark that low, mark that high. Again, if we have enough momentum, don't worry about where you are on the chart. I know it's scary. We don't want to take losses, but you know, remember, losses are inevitable. That trade right there is going to work 8.5 out of 10 times. Again, if you have enough strength. Again, it may not go much further than that low, but it's a must-take trade. You got to put some skin in the game. Your job is to execute that trade if we get there tomorrow. And again, I'll be right there with you tomorrow, working the checklist and making sure we're doing it the right way tomorrow. You know, not making excuses, as I always say in my trade room. Skip the excuses. Take the darn trade. If you worry about the loss, go to simulation for a little while until you get your bearings. And once you see this work enough times, you'll get into. You'll get there. You know, I do realize a lot of us get burned by some big losses early in our career. But keep your risk profile really small and start on a simulator. You'll get it. A couple of weeks with me in the trade room, you'll get it. You'll get it. Everyone does. As long as you don't overtrade it or trade too much risk. You're trading 10% risk per trade. Of course you're going to be scared. I'd be scared too, right? Keep the risk small. Anyways, we'll talk about more of the risk profile, how to manage emotions. I cover a lot of that stuff in that quick start class in the upper right-hand corner. That's going to be a nice trade as we go lower. And then if we really start to bleed, you know what I mean? If we really kind of pound lower here and start to kind of grind, you know the drill. You know the drill, right? Find those pops. It's a spiking channel. Wait for that pop. Get that trap, that failure, that pullback, right? That trap, that failure, that pullback. And again, if you have enough momentum, it's just a matter of time before that bounce comes all the way back down again. So, right, find those entry signals we talk about in the quick start videos and hit them, or of course be there tomorrow with me and we'll do it together. Prior all time is going to be an easy magnet there if these bears get this party going. The one variable I think for tomorrow would be if we go up, we get that trap, and then we start going sideways here, right? Just going to keep it in mind. If we do, we're going to probably get that short signal or we'll get that reversal. But let's just say we do settle in to this trading range. Okay, if we settle into the trading range, what's the trick to a triangle? The trick are the edges, right? The edges. So we go up, failure, back down, right? We go down, try failure, back up. Why? It's because we're bearish, right? So trade the edges. Make sense? So this thing really settles in here tomorrow. If it really settles into this triangle here, which could easily happen. I mean, you got a range here, a range there. I mean, it wouldn't surprise me if you filled in the gap, in the middle here. But if you start going sideways in the range there, what do? You mark up, again, mark the edges, right? Mark the edges, okay? Buy low, try, sell high, try, and look for the breakout, the 1, 2, 3 breakouts. Guys, I'm sure there's something here I didn't cover tonight. So tomorrow morning, trade room, 8 o'clock Eastern time. Don't miss it. Let's finish up tonight on the gold. Now, I know last night I was pretty bullish on the gold, right? Now I'm back to being a bear now on the gold. We pretty much got what we talked about, right? If you watch last night's newsletter, we had that nice move down, and of course we're looking for that trap, right? And that trap and go. Right? And as you recall, right, we didn't get that trap and go. Instead, we took out that low, And as I mentioned before, if we take out the low, now it's that failure into pullback combination. So we got what we kind of bargained for today. Well, I guess last night, I guess this point now. But now here's the thing. Now we're way up top, and this is definitely a new range down here. This is definitely a new range. So what are the main components here right now on the gold? We are definitely overall bearish. We have a trading range acting as a magnet because, again, recency is very important. Yes, there was a range right here, but again, you guys know how this works, right? So we go down in a range, we go lower, we come back, and surprise, we're up in the underbelly of that range now, right? Trying to go back down into that previous trading range. So that range below us is, again, this range down here. This is the magnet. Now the second big component of this. Oh, one more thing too. Whenever we have a range, we know ranges, of course, are magnets. I want to find what? I want to find levels of support and resistance outside the range, so I can buy at support and sell at resistance. This is where triangles come into play. If you haven't learned about triangles yet, welcome to the club. Welcome to the party. Expanding triangles are very, very reliable in range-bound markets. You can see that, right? Buyers are buying off them there, and hopefully we're going to get some sellers selling off them there. That's kind of right around that. It's a range, right? It's a range with that expanding triangle. So we're bearish. We know that. That's one piece of it. We're range-bound. Second piece of it. The third piece. Yeah, that's the big headache right now is the big bull jump. That big bull jump, what does that tell me to do? Is it a reversal yet? What do you think? Is it a reversal? No, it's not a reversal yet. I mean, it's definitely a very bullish move. But until until we can get these guys to get up there and hold above this triangle, I mean, yeah, don't kid yourself, right? It's a very strong push higher. I know that. You can definitely see that. But until we can get and stay above that triangle here, this thing is just waiting to drop all the way back down into that trading range. So we're definitely not there yet. We're not there yet. The buyers have it. They're right there, though. The buyers can rip this thing, back in control. Well, they can take this thing out of this range here. What should be pretty easy there for the bulls, but they have to put up this fight. They have to fight for it right now. If they don't, we get a big bull run up. And how many times have we talked about this pattern tonight? Just tonight in this video, right? Look, buyers come back, they try once. Buyers come back, they try twice. Remember I said earlier, find that channel. Okay, find that channel off that low, off that high. Look at this beautiful setup that we have here right now. It's almost like the opposite thing we saw yesterday, but I'll tell you, this looks really good. I love that triangle top. I love the fact that it's a triangle top, it's a trap high, it's a channel test. I mean, it's like Christmas for day traders here, or fill in whatever blank holiday you get gifts on, right? Whatever, right? So that's a great looking setup. And then don't forget, this may end up trapping. Nice strong signal candle for the bears. Big, strong run down. Can I make this work? Strong run down. And remember, if it really collapses going lower, I don't care if I'm back in the middle. Find that new channel, drill down to a faster time frame. Again, if you ask me, my two favorites are traps and failures off that high, and then trade the pendulum, trade the rotation, as we said last night, right? Find that triangle. That's going to be your objective on the side. I would love to think we'll go all the way to that pendulum swing. We might end up there, but as I always tell my clients and myself every morning, don't be lazy with your winners. Don't be lazy with your winners. Take your profit at the right place, because when you take your profit at the right place, you lock up the right amount of profit. It pays for your losses. If you get greedy and you put that final target all the way down here, and the market bounces off that low, and you get stopped out way up here, and you miss out on a couple $100 per contract on that final target, guess what? That couple $100 could have paid for that loss you take by mistake next week. You see what I'm saying? That's why I say don't be lazy with your winners. And again, these are some of the psychological stuff, some of the mindset stuff we do a lot of every day in our trade room. I think it's one of the biggest advantages of being with me. I've been doing this for a long, long time. I've probably made more mistakes than anybody watching this right now. I could write the book on how not to trade correctly at this point, which I think is what makes me a good teacher as well. So we know that's how we want to sell it as we're going down. If the market was to collapse, Okay, let's face it. If the market was to simply collapse running lower, if it collapses and runs lower, gig is up, find that trap and take it. If we collapse and run lower, gig is up, the bears are going to get aggressive. Because if we don't get that trap high, if we don't get that pop and that short back down, again, gig is up. We know what's up. The bears are going to come in. They're going to attack this thing and want to take this thing lower. We may also see it go higher here and take out that high. If that's the case, do we still short it? Yes. But now again, we wait for 2 tries. Same thing. 1, 2. Can I get that, get that channel? Great. If not, sell into those stop losses as we go back down again. It's the same basic strategy over and over again. If you're looking for variety, we get a lot of variety because the markets are always different, but we trade the same rule-based strategy pretty much every day in our trade room. Again, we apply it differently for different market conditions every day, but it's always the same basic recipe, basic components. That's why it's easy to learn and why our clients do so well with it every day with me. So we have that. Or we have that reversal going lower there. If we go higher, where's the target above? Get that range above. Again, the buyers have all the momentum right now. All you gotta do is hold this. All to do is hold this right now. Now I get a 1, 2, 3 move, find that high, find that low, drill down to a faster time frame, right? First test is the best test off the low of that channel. We might see a very strong pop up, shallow pullback, higher high, mark that low, try to find that channel if you can, right? Not required, but if you can, definitely grab it. There's that 2 try trap. We're probably not going to get that spike in channel, but if it happens to, probably not going to spike in channel up there. I'd be surprised. But if it happens to, that's okay, right? Wait for that steep pullback, that trap, that failure, that pullback combination. Again, a lot of this is repeating myself, so I apologize for sounding like Mr. Broken Record here tonight. But again, same way to apply it over and over again. Let's see here. We may end up back inside this range. It may run up into that trading range. What do you do with a bull market into a range? You find levels of support below the range. You wait for the pullback. You wait for those poor sellers to try to get short, and you use their stop losses as fodder, right? As gasoline, right? Use those stop losses to buy into those stop losses with a failure pattern. It'll look a lot like this, except it'll be a bull market into a range. You know what I'm saying? So that's a good setup there too if we do jump up and go into a trading range. If we do jump down and go sideways down here, what? It's a bear market. Wait for levels of resistance overhead. Get that pop. Get those buyers to come in and try to buy the pullback and hit them where it hurts. Sell right into those stop losses, right? So we got some pretty good ideas here for how to trade it. The one thing you want to be careful of again is if we get stuck back inside the range, just don't trade inside the range. We may end up all the way back down to that low. If we have this move all the way back down to that low, be careful trying to get long. Wait for those bears to try once, wait for them to try twice, and then we can get long off of that low, because again, it will be a range. It will be a range here. But again, with all that bearishness, give them 2 tries, and then we can hit them going back up into that trading range. Or we may see it roll lower and start to grind. Again, summertime markets, don't be surprised. If that happens, it's a spike in channel. Again, find those prior swings, wait for that trap, failure, pullback combination, right? And you're heading down to finish off that pendulum swing. All right, guys, I know I've covered a lot here this evening on this video. I've covered a lot. I want to give as much as I can every evening on this video. News of these markets have given a lot to me, and I want to give back as much as I can here on this YouTube channel. I hope you subscribe to our channel. I hope you'll take a moment to hit the like button or grab the copy of the link for this video and share it with some friends, because the well never goes dry. That's one of the best parts about the financial markets is I can share this information with as many people as possible. It doesn't hurt my trading performance whatsoever. Don't forget, again, I'll put all the membership links for tomorrow and every morning's trade room. I'll put that right in the description of the YouTube video. I'll put a big button for you below this video on the website. Don't be afraid to call the office. We get a bunch of membership specials going on right now as we finish up the summertime season. I'd be happy to walk you through the entire process. I got live chat on the left. We got live chat on the right. You can always drop questions in the comments section below. But that is it for me tonight, though, guys and gals. Hope you enjoyed the video. Thanks for sticking around with me tonight here. If you're watching this video right now, you are exactly the person I work hard to help succeed in these markets. These markets will change your life. They changed mine in so many ways over the past 15 years. But I got to run for now. Have a great rest of your evening. I'll see you tomorrow morning at the opening bell. If not, I'll see you guys tomorrow night. Sorry, not tomorrow night. Tomorrow's a Friday. They do let me out of my cage every once in a while here. I'll see you guys next week. Have a busy, busy final week of the summertime. Next week, we're going to the month of September. We get end of the month, new month transition. Got a lot to talk about next week on the video newsletter. But take care of yourselves. Have a good day tomorrow. If I don't see you guys in the trade room, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.